working. There we go. All right. Welcome, everybody. Sharpen your trading skills. What season, what episode we on now?
This is season 12, episode 7.
All right. Yeah, so we got a pretty special guest today. We had Kel on a few weeks back, and I've been trying to get J Money on for a while. He's been one of easily my favorite follow last year. Just getting good insights on the market. We've talked about him a few times on stream too, and throwing out his Twitter handle. I know a lot of you guys have been checking his stuff out. So he was kind enough to join us today. We're going to go through some things like his background, his strategy. We're going to look at some, just current charts in the market right now and stuff like that. So, J Money, thanks for coming on. If you want to get started with kind of just your background, kind of how you, first got into the markets and into trading in the first place.
Yeah, thanks for having me on, guys. It's funny to say this out loud, but I'm a COVID trader. That's what brought me to the markets. My whole life, I grew up going in college, did finance, and just all the calculations, all the balance sheets, projections. I got super bored with it, so I graduated Indiana University, Kelley School of Business, with a finance major, but just really didn't want to get into that, in terms of my career. So I got an internship, in a sales job, and did pretty well in my internship, and then went back full time. I'm still working. I'm still, full time. I still have a full time job, trade on the side, and it's going pretty well so far. But when COVID happened, like I said, I was a finance major. Never really thought about the stock market. But then when it happened, just from what I learned in school, I was like, wait a second, this might be a once in a lifetime opportunity here, with how much we crashed. And then so I was like, all right, let me just put in some money. I'll just start, buying random indexes, that sort of thing. And obviously, I had no idea what I was doing at that time. I was just buying anything and everything. I think like Peloton was a big one back then. Didn't really know, but I knew that once I had, some skin in the game with whatever it was, like I started to realize, like, okay, I really want to do this. And then from there, um, I just started pouring over a whole bunch of YouTube videos, whole bunch of books, follow a whole bunch of people on Twitter, try to get information from the right people. When my girlfriend was in law school at the time, and obviously COVID happened, so there was an abundance of free time, and so I looked at it like it was an opportunity, in life to really hone in on this, because with not able to do anything in the world, um, it's a once in a lifetime opportunity to start learning. Um, so back then, we were talking about this before the stream started, but Trader Stewie was very instrumental when I started trading. I remember just having alerts on, on my Twitter, and just every chart that he would post out, I would study it, look at it, try to understand what the hell he's talking about. I had no idea at the time. Um, and he was very instrumental, for me. Joined his private group, had a great 2021 with them, and I didn't really know what I was doing. I remember back then, if Stewie would put out a chart, I would then like print out a blank chart and see if I could come up with the same patterns that he was. And I still think that is very useful for any new traders. Is, you see the patterns that he has marked up. Okay, try to study it. Now get a blank chart and just try to fill in patterns where you think, and then you kind of compare your results. So that's kind of like what I would say 2021 was just like we all started with, right? Just following people on Twitter, learning YouTube videos, while I was really trying to, deep dive and dig deep into these books. So did pretty well in 2021. I'm sure everyone did, right off the start. And then 2022 happened, and it was it was brutal. I would like to think that at the time, I thought I knew what I was doing in 2021, but I looking back on it, really had zero clue what I was doing. But I made money, so I fell in love with it. To be honest with you, and then 2022 happened. I actually did really good shorting the top. I remember being on vacation and the indexes were making new highs, but if you remember some of the names like Upstart at the time, like they were just getting smoked. And so when that starts to happen, some of the leaders are starting to get smoked. Well, it's only a matter of time where the indexes roll over. And so I actually did a really good job recognizing that. Um, but then what I didn't anticipate, and I don't know how many people anticipated this, but was this, huge, bear market we had that basically went on. I know the indices here, it's technically a year and a half, but if you were actively trading in here, there was a lot of false breakouts, if you remember. So it was a tough, year and a half really. But then 2022, that was a reflection year for me for sure. Because 2021, I was like, oh, I know what I'm doing, I got this. And then 2022, you just get freaking punched in the mouth. Had never seen a bear market, had never seen a bad market. Based on when I started trading. But looking back on it, like I'm so pumped that it happened because now I know exactly what it looks like. I know how it feels. Like I know, once you start seeing your account draw down, how to step aside and like really learned a lot about myself as a trader during that time. But I remember going into 2023, so last October and November, and I knew like that I loved this and I wasn't going to give it up. Nothing. Wasn't nothing was going to stop me from trying to trade. And so I really, kind of took a long, hard look at myself in the mirror. And what I realized is that I thought I knew a lot more than I did. And so I hit the books pretty hard, and really, focus on my mistakes and what I can learn from, and just ways to perfect my craft. I mean, like during 21, 22, during 2021, if you traded a bull flag, you're probably going to get pretty good gains on it. Like it was, easy mode, right? And then so that doesn't work during this drawdown. So I started to realize like, okay, you have the bull flag, but there's got to be much more to this. How can you get the best entry in the bull flag? How can you buy where the pros are buying within the bull flag? And so I really redefined my process during that time and what I was doing. And, I realized I was taking too much risk. So like for me, 3, 4, 5% loss. And by the way, I only trade it, common stock. For me, I can't stomach a 3, 4, 5% loss. Like I don't hold, really any losers overnight. Like if I have a losing swing, I'm most likely going to get rid of it. Um, so sorry, I'm talking a whole bunch, so just cut me off if you guys,
No, keep going.
have
It's
anything
great.
to
Keep
say.
going.
But yeah, when 2022 ended, I just decided to have like a, come to Jesus moment. Okay, let's hit the books because what I've been doing was not good enough at all. So I think over the past year, I've had a really, really good year, really proud about my year. I've worked really hard to try to get where I'm at. But I think, I'd be remiss to not mention him. Oliver Kell has helped me, tremendously. Um, his style is kind of, quickly of what I do, and I didn't really realize it at the time, but there's all different types of swing traders, and trading. What's really helped me is trading on hourly charts, within my daily charts. So I'm all day, all night going through my daily charts. But then when I'm actually coming to trading and executing and finding low risk opportunities, that's coming from my hourly charts. And I think that's the biggest key in how I started to succeed. was low risk hourly charts. So 2023, I'm kind of just walking you through my background with the stock market. But
Yep.
2023 was really great to me. Really proud about it.
Would you consider 2023 a little bit of a breakout year for you in your trading?
Yeah, for sure. So this was my third full year. So I was profitable in 2021, got absolutely smoked in 2022, feeling pretty bad about myself. Time to hit the gym, time to get serious. And then 2023 it has been awesome. Yeah.
All right. So I guess you want to just tell us a little bit about like your style. I know you're an equity trader.
Couple. Can I ask a couple questions first about the background? You already mentioned top some trader influences. My question that I wrote down right when you started talking was, who are your top three trader influences? You mentioned Trader Stewie and Oliver Kell. Anyone else that that people should that you've learned a lot from, that people should check out?
Yeah, Stewie was awesome for me. Starting out and just recognizing the patterns. I think Oliver helped me, so much in terms of entries and just really dialing into specific techniques and strategies, that are more I guess detailed than simple chart patterns on a daily chart. Other than that, I think like it's important, and I got caught up in this. It's important to really limit, where you're getting your info. If you're following 6, 7, 800 people, at least for me, there's a lot of not smart people out there. Even if they are smart, maybe they're not doing the same strategy and time frame that you have. So it's just really, there's a lot of clutterness out there. But some other traders like, I mean, really, there's a ton of good ones out there. Just go through go through everyone that Richard Moglen interviews, and all those guys will just put you in a great spot.
There it is. That's what I was looking for. Awesome. So yeah, I guess you have any questions, TSR? Is that good?
That's good. That's
good. All right. Yes, you want to tell us just a little bit about kind of your style, your strategy, how you approach the market?
Yeah. I'm a swing trader, simply common stock. I've never traded an option in my life. I typically, when things are going good, I want to have, 10, maximum 12 names. I've been guilty in this last rally having 14 or 15, when things were working. But big on moving averages on my daily charts for sure. What really is the whole guide map to me, and when I've gone on my best runs, it's all come from weekly charts. I think weekly charts are the backbone to everything I do, because in a weekly chart, you're able to zoom out and really look big picture of where you're at in the cycle. So if we're extended in a weekly chart, are you really wanting to be on full margin? Your best moves are going to be when we're coming out of solid bases, multi-month bases, whatever it is. So what I do is, all of the names I'm really interested in, I have their weekly charts pouring through. Okay, can I get any patterns on there? I'm also looking at their dailies, where then on their daily chart, I'm trying to find bull flags and double bottoms and EMA pullbacks and you name it. I'm really looking for all types of patterns on my daily chart. And then when it comes to my entries, that's what I got pulled up here. Like all day long, I'm looking at these hourly charts. These hourly charts, like I've been talking about, this has been the game changer for me. 5-minute charts get way too chopped up. I can use 5-minute charts for entries at times, but depending on what kind of advanced level trader you are, I don't think that 5-minute charts are good for you unless you're trying to get a couple points here and there. But if you know where you're at on the weekly chart, and the cycle of it, and then you can find a pattern on the daily, and then you can see a low risk opportunity on the hourly, then all time frames are lined up. And that to me, like when all the time frames are lined up, you got every type of investor, every type of trader all looking at this thing, and that's important. I use VWAP for intraday charts, and typically a lot for earnings gaps, a lot for trying to get entries right off the open. Like I love something that will open and then it'll come back into the VWAP, and then you can set a stop loss below the VWAP. And of course, that all comes from the daily chart and the hourly chart that I've already pointed out. So I'm not just doing that with any other stock. Like if you get multiple time frames that are increasing your chances of being successful in that stock, then that's a really good sign. And then gaps. That's the other thing I have written down here. Gaps are really, really important for my strategy. Everyone has this misconception out there that every gap is going to go filled. Well, I believe that's bull crap. There gaps, and I read it. I got this book right here. This book, Japanese.
Hey, that one just came in 2 days ago in the mail because I remember you told me to order it, so I just got it 2 days ago.
Oh, good for you. This book was huge in terms of understanding gaps for me. This, my advice when you're reading this book, it gets pretty boring, but you got to stay dialed in because there's so much good information in it. So for me, I was redrawing patterns, redrawing candlesticks to really understand the psychology of the candles, of the patterns. Like these patterns are not just random movements on a chart. This is supply and demand playing out in real life. And these chart patterns, that's because of supply and demand, and that's why they work. So that book has been awesome for sure. And gaps, how I brought gaps into my process, I learned from that book.
Awesome. So I guess we can get into our next little segment that we have planned with some of your bigger winners from 2023. And I'm also really excited about this too because I'm really curious how you manage winners.
For sure.
Because I've even seen you add to winners before, in a trend too. So I'm really curious to see how you go through this with some of these.
Can I go over the weekly charts of the index first?
Please do. Please do.
Okay. All right. So, we mentioned the 2022 bear market. It was brutal. Happy that it's gone. Don't know if we're going to be in another one. Nobody knows. But it's like I said, good to see that play out. But I was on, let's see, I took a vacation right here in December of 2023. And so I missed this first part of the move. I had a few things, I did okay in this part of the move, but really the market was coming off the bottom. Nobody was trusting it. It was a mess. I mean, all these moves off the bottoms, it was kind of untradeable. At least maybe I thought so at the time. Maybe some pros got it, but at first we kind of want to talk about just the general market of how we bottomed. So this right in here, you can see, that's when we had our highest volume.
Your chart's kind of frozen a little bit. I don't think we're seeing your mouse. You want to try to refresh maybe?
Oh, does this work or no?
You see it, TSDR?
No, I don't.
You don't see my chart at all?
Here, just click stop share and then just click new share again. Sometimes it'll do that for me on Zoom too. Just pop that tab right back up and it should work just fine. Sometimes the Zoom will act up. Oh, there we go. You had to switch tabs. It only stays locked on one tab. There you go.
Oh, I didn't know that. Okay.
You're good. We're looking at it.
All right. Yes. So this was when I started to pay attention. You got the double bottom, whatever you want to call it. You got support right here. You basically made the new low right here, and then we rallied up. That got rejected. Then we made a higher low, and that's really important. So, you got this low, that was the capitulation. Then we went under here, reclaimed it, put in a rally, came back in and tested this general zone and put in a higher low. And so, that is how bottoms are formed. And I love this chart, to be honest with you, because it has everything you want in a bottom. And then we put in this initial thrust for probably 5-6 weeks, and then we started to bull flag here on the weekly, and you got a lot of stuff just all coming together at one time. You got this downtrend line back test. So that, that's okay. That's important. That's one thing. This blue moving average right here is the 40-week moving average, which is equivalent of the 200-day moving average. So you got that coming in together. And for everyday traders like you and I, like maybe I necessarily am not going to trade specifically on that, but it's no coincidence that this big money's stepping in when you got all this confluence. You got a bull flag, you got the down trend line retest, you got another higher low here from this higher low, and then you had what was really the icing on the cake, this big wide range body candle. That's a bull engulfing weekly candle. And that came on some Fed announcement. Maybe that inflation was slowing. Doesn't really matter, to be honest with you. And I caught this perfectly. Like I basically had it right up against the lows. Had a whole bunch of stocks that were setting up out of bases, and I can show those in a minute. But that was perfect. And so I got a great chunk of this move in the spring of 2023.
Look at the volume on that candle too. That weekly candle, that volume down there.
Yeah, the volume. Yeah, look, I mean, that's the highest volume we've had since the capitulation, basically. And so that, also at the time, no one wanted to buy stocks. No one trusted this rally. Everyone was really short. The sentiment was horrible. You were in, fear sentiment. So when you have price action that looks bullish, but you have sentiment that looks bearish and positioning that's bearish, I mean, those are like the huge moves that I've been really, really good at capturing. And I'm good at seeing them in real time. That's like the one thing, not the one thing, but I would say that's like the one thing I'm good at is knowing when everyone hates stocks of when, okay, but the price action's saying the other way. So then we got real tight in here. So we went 1, 2, 3, 4 weeks tight. And again, no one trusted it in here. And it was just, everyone thought we were going to roll over, come back down. But, if you do any homework, you'll know that this 3-4 weeks tight out of an explosive move is something to really pay attention to. So the fact and like, again, at the time in March, everyone's talking about the inflation reports and the foam, the Federal Reserve minutes and all the boring stuff that I hate talking about. But in here, it was just funny because for me it was just like right for the pickings. So then got a whole bunch of moves in here. I was a little late to sell the top in here, but I think this first week in here or second week I was basically out of all my swings and recognizing that we're going to correct because we just had a massive move. So that came in July to October. It was October 27th, basically Halloween, around then when we bottomed this last time. But see, a few things here. Okay, so this is a weekly cup and handle, right? That's the way I'm looking at it. Then you have, you could think about this as the handle. Have one leg down, we rallied back up and failed. 2 legs down, rallied back up and failed, and then 3 weeks down. And guess what? That blue line saved it again. These are pros. These are pros buying in here. And again, something to note is this came on the Federal Reserve, saying that next year in 2024 they're going to stop cutting rates. And I want to pull up this daily too.
Also, back on that March spot where the QQQ retested and put that bullish engulfing in, that was regional banking stuff was occurring right then too to add to that.
Yeah, very good point.
Wanted to buy stocks.
Yeah, I was going to mention that. Yeah.
Yeah, very good point. Very good point. And I don't know, how many people follow me on Twitter, but I was pretty arrogant at the time, and I'm embarrassed for being like that. But I was just pounding the table to buy stocks back then. I felt like I just wanted to help people. But so this is so we were just going over the the weekly of where we were at in this way larger weekly cup and handle pattern. We talked about how we were testing. I knew, because I look at my weekly charts, I knew that we were coming into this huge level of support. We had a massive move, 10 to 12% correction. Got it measured out 11.8% correction. Very healthy. Nobody thought it was healthy. And then the low was right here on this 40-week moving average. And then so what I did is recognize on the daily. I talked about one leg down, two legs down, three legs down. Everyone thought the world was ending right here, and maybe I thought it did too at the time. But I was very cognizant of the weekly chart, and I was very cognizant that this might be a bear trap. So I basically caught the lows in here because of the weekly chart and where we're at in the cycle, and saying, okay, I can take some aim at some stocks with low risk, and we'll see what happens. And then when we had this candle, when we reclaimed, this big support line here that failed, when we reclaimed it, that's when I was like, okay, the game's on here. And from there on out, I mean, it was really hard for anyone not long already to get long, because there was really no entry. Everyone thought in here that we were going to pull back and come in and test down here. Didn't happen. Everyone thought when this bearish engulfing candle happened, that we'd come back. Didn't happen. And then we just, really ripped to new highs above the base. And I labeled this. I was on, Twitter at the time talking about it, but that's a breakaway gap in my opinion. Just classic lockout rally. Shows you how damn strong the market is. You're coming out of a base. You're coming out of a 2-year cup and handle base. And then so I felt like that was a really good level of interest in case we ever pulled back to it, which, sure enough, we did. And I mean, it held perfectly. So I can show you guys the hourly chart here and how I was trading it at the time. But it held this breakaway gap perfectly, and then took off, as we know, right up and through Christmas. Yeah, it's been a good run. And
Man, I love how, so you talked about how you're really good at like, recognizing that bearish positioning and bearish sentiment, and getting in really close to bottoms and stuff. And it's funny because on the summer rally, is when I first started reading How to Make Money in Stocks, William O'Neill. And he has hundreds of charts in there from the last 100 years of big bases and big cup and handles. And I was looking at that weekly chart. I was like, man, this is playing out like every chart, like in history, coming out of big bear markets and bases. And that weekly chart on the Qs is going to be like great study material for like decades to come too. That's a great chart.
I mean, that's the thing. It's like, again, I've only been doing this 3 years, and I'm looking through all these books and studying and doing my own research, and I was just looking at all the book, and I'm like, this looks, perfect. Everything I'd want to see in a chart, and sure enough, it was. But I think, again, a lot of what fueled that big move was just positioning, because everyone was so short.
Yeah, it's actually pretty cool too, because that correction there on the daily that you have right now, that you talked about, the the one leg down, the second, the third, it was kind of like a miniature version of the bear market in 2022, where you had like the 3-wave bear market.
Yeah,
and it's cool to see that play out on like a smaller time frame, right?
Yeah.
But if you want to get into some of your other winners from this year too, that'd be pretty cool.
One question quick. Okay, let's look at the QQQ daily from the November or end of October low, right? You had mentioned that it was really tough for people to get in if they didn't recognize that bear trap. If you were educating people or guiding people, what would, man, I know you did this really well on Twitter, but how do you get in?
Yeah, that's a tough thing. I mean, if you don't have, okay, I think it's important to recognize that, if daily stocks if a whole bunch of stocks are breaking out at a daily basis and things are looking good, and you're not long, and maybe you miss some entries, like it might be okay just to take a stab at a few, and surely it would have, it would have paid off. Now, I'm not saying to buy 7 or 8 or 9 days extended, but we can get into this. If you look at hourly charts, there's certain little dips that you can get in to try some things, and have a low risk entry and say, okay. And also, I think it's important at the time, like when this happened, I was really, really focused on the leaders, and what can be, a leader. And so it's knowing who are the leaders. And then so if you think that the market's breaking out like I did, I would rather be in the leaders or what I think can be a leader, than some like garbage stock that hasn't broken out of the base, which is probably a laggard. If some of these aren't moving, but the moves have already started, you're probably trying to buy a breakout in a laggard, which maybe isn't good. So if you think you missed the move, okay, maybe we then focus on what you think are the leaders. And so at the time it was CrowdStrike and ZS are a few that I was really focused on, ANF. So maybe you zoom into an hourly chart and you just try to take a stab at something. There's really no good answer for that because that's the definition of a lockout rally.
It's all practice, man. I mean, yeah, it's
Yeah.
all practice. TSDR, did a very good job of that in November, mentioning the hourly charts and just trying to spot higher lows because it became pretty clear pretty soon that, man, they might not pull this thing back, and just using higher lows on the hourlies and just trying to find like good spots to risk off of and take stabs on things pretty much.
Yeah. Can I show you what that hourly looks like?
Yeah, go for it.
And this will probably be good because maybe I could point out some things. So this is the bear trap that we were talking about on the daily chart here. And then so I was, a lot of these gaps are really, really strong. Let me delete that. So like these unfilled gaps off the bottom, when this happened, I was like, okay, worst case scenario, if I start taking some longs, I'll know if I'm wrong because the indexes will likely roll over and fill these gaps. And so when I start seeing unfilled gaps, especially when you get 2 or 3 of them in a row, like that's a really good sign that, okay, the market might be stronger than a lot of us think. And then so in here, that's where I started to build a lot of positions. And then so if you missed, kind of the bottom, and the bottom's very hard to catch. And look, I've lost a lot of money also trying to, call bottoms. And so I'm certainly not perfect. I'm the last thing from it. But, if you're right, they certainly pay off. But if you missed it, this was a decent opportunity intraday, in here, you pulled back to VWAP. And then, this is tough. It's just tough to get into if you're not long yet, because this happens, you're probably thinking we roll over and fill the gap. And then, it just kind of goes. Everyone thought we were going to roll back in here. This was what I call this was a bullish, or I'm sorry, a bearish engulfing candle. And then we put in a bull kicker and just ripped the highs. And so that caught a whole bunch of shorts off guard when everyone got short in here, thinking that we were going to roll over. The bulls just absolutely ripped it. And then we had that breakaway gap that I was talking about in here. And then this is, so when we came, sorry, I'm trying to get the scaling good. So this is where we got a little choppy and around Thanksgiving area. I was never freaking out because we had the moving averages on the daily as support. We were just short-term extended. And we had never tested the daily moving averages. And then so like this action right here was huge because when I saw this gap down and everyone was freaking out, but we held this breakaway gap that I highlighted on the daily. Look at that fight back. You got the bears try to take it down, but then the bulls just immediately step up. Like that's big to me, big to how I trade. Again, certainly choppier in here. Then you can start to see, we got some patterns developing. This resistance line right here, I have these drawn out. You got the downtrend line, you got the resistance line. Then another gap right here. So like I said, then you're building on gaps. You got 2 to 3 gaps. And then we just went on that huge uptrend.
Man, I love how when TSR asked that question about how do you get into those, you kind of just said you just got to take some stabs. And I'm sure throughout that, correction and, July, August, September, that you did maybe take a few stabs here and there and try some things. And the thing is like, if those don't work, keeping in mind what the weekly chart looks like and the fact that we're just resting coming off of a huge squeeze in the summer, that like, man, if you can, like, if you're right on one of those, and you're starting to realize that like this, it might be game on, and you start adding, like you that will make up for all those small losses that you took, like little attempts at. I mean, the risk reward will just work out in your favor, like incredibly, right?
Yeah, and that's important now that you have a reasonable stop loss, because if you're taking stabs at stuff and you're piling on big losses while the market really isn't doing anything, that's a recipe for disaster. So that's where I've been talking a lot about these hourly charts. That's where an important part of my process comes in, is that I'm finding patterns on the hourly chart within the daily chart pattern where I can really have like a very small risk. And I take trades all the time that I'm wrong on, like majority I'm wrong on, but the risk is so small that when I'm right, like I really just pays for all the mistakes I made.
There it is. There it is.
One little question about that positioning, and I'm really curious about this. And some of those VWAP entries that you alluded to, I'm not sure if this was in the early part, which were just Brock and I, but if you say you lose that VWAP, or maybe lose that VWAP and retest and reject that VWAP intraday, and you're down maybe 20 basis points on a position that is something you want to get into, and here you are rejecting VWAP, hourly is not getting the thrust as much as you want. Will you stop out of something that quickly intraday on something you intend to swing?
Yes. So if I, like my process starts on the daily chart pattern, even the weekly really, but then I'm on the hourly. But if I'm using VWAP and I have a chart within the hourly, I will then use like another method to get on the 5-minute VWAP as like an initial entry, and maybe have a stop below, the VWAP. So like if something goes off the open and then it comes back in and then tests the VWAP, maybe I'll try it right there that first time. And then if that holds, like then okay, like I'm working with something, because then okay, you got a winning position just based on a VWAP trade, right? But then in the back of your head, okay, we're coming out of this hourly pattern, we're looking good on the daily pattern, and the weekly's lined up. So that's kind of the bread and butter for everything I do.
So like Shopify today, you had mentioned that hopefully it's okay. You mentioned you got in that today,
Yeah.
right? I'm guessing you got in somewhere around 72, maybe lower, maybe a little bit higher, give or take, 10, 15 cents.
Let me see. So let me walk through the trade. So Shopify was a good one because look at all this support. This highlighted shaded area that I have right here, that is significant. That's basically telling me gap support. That's what I do with these shades, is that I label them in my head as gap support. So when you see this like big candle that comes down and then it immediately wicks up, like that tells me off the open that institutions are buying this gap and buying this support. And then so what I did is then, okay, that looks great. Then I use an opening range, and we haven't talked about this yet, but something that I've been incorporating. Use what's called opening range highs. So for me, it's 5 minutes, but I'm not in this thing in the opening range 5 minutes. But then when it fights back, I was already looking at it from the hourly chart, and when I see this pushback, I have no idea what the 5-minute chart looks like. When I see this candle here that's defending gap and the support, then I'll zoom into the 5, and that's when I got this opening range high. So when it broke the opening 5-minute range, that was my entry, and it worked like a charm today.
We trade those all the time. We call it the ORB, the opening range break.
Okay. Yeah. I don't know what level you guys trade with, so
yeah. And then First off, a couple things about this Shopify, which was I've had on my radar this morning as well. If you go even zoom out to that July 14th high back there is 71.43. Also lines up exactly with that zone that you've got highlighted on the chart.
That's yeah, great point. And
Love,
you know that
love
can
that.
be seen on the on the weekly chart. So
Yeah.
you know, if you got weekly charts in your process like that, you know, that's an area of interest for sure. So I didn't even necessarily trade it that way, but that's a great way to look at it.
And then next part, say this Shopify goes down 71.50, 71.40, and loses that opening range, and you start to drift back, towards 71 this morning. What are you doing?
I mean, I'm out. I hate a losing position. If it doesn't work, like, you know, basically immediately for me, because I'm trying to be real, you know, surgical about what I'm doing and trying to really pinpoint entries. Like, you know, especially if I'm going into something with size, like I will not sit there and hope and hope and hope. I will say that one thing that I'm not good at, and well, I'm not good at a lot of things, but the thing that I'm, you know, really trying to focus on is recognizing tops, and you know, having a big winner in something and not selling offensively. It's a double-edged sword because I've made a whole bunch of gains by not selling offensively, but at the same time, you know, I'm looking back on the past 3 day action. Certainly wish that you know, that maybe I sold some things earlier.
Yeah, I mean that all comes, I think, with like just experience and being in different market cycles and stuff. I
Mhm.
mean, you hear some of those great U.S. investing championship guys like David Ryan, Dave Ryan, who like literally like has like just such an incredible intuition on like reading bottoms and tops in the market. Because I mean, he's been trading for like 4 decades. I mean, those guys, their intuition is just on another level. They can just see it in the action that things are kind of getting exhausted a little bit. You made a good post on this too, kind of like a little reflection. If you want to talk on this real quick.
Yeah, this one, you know, this one really losing money sucks, of course, but this one really pissed me off because I've been really working on this and recognizing this and trying to, you know, to really get a gauge of what the market's doing. So, you know, I've been showing this rally on the hourly chart. You got this good looking uptrend here. This was mid-December. You know, you had this trend line break, and it was like, okay, you know, that's looking a little spooky. And I actually posted on something on Twitter that we had seen these little shakeouts before, and so I was kind of, you know, bullish on it, and you know, but I didn't know how much it would you know, last considering the move that we've already made. But when we had this trend line break, I should have been more defensive in terms of what the next week or two would look like. And I knew I'm pissed off because I knew that we would likely start to pull back, but I don't think I knew, you know, exactly when. And so when we started to wedge up right before Christmas and the day after the day the market app opened after Christmas, like it's a low volume rally up. You know, it's pretty lackluster. We were making money in here, but it was just starting to get a little frothy. And then I should have been out here. This was that Friday, last Friday, and in my head, I told myself, okay, it's a low volume trading week. The big boys will come back next week and save the market. You know, there's no volume. It's just chop. You know, we'll be fine and we'll continue this uptrend. But when this wedge drop happened, like I should have definitely been paying attention. And again, I just thought that okay, next week they'll come back. Well, what we do, what we do Monday or what Tuesday? The market's open Tuesday. You know, we had this gap down, and this gap down like that sucked because the way that the gap down played out, like there really wasn't much room to work with. Like, you know, we gapped down and we just immediately sold off the open. And then we came right into the 20-day moving average. Then we tried to put in this little rally and failed. And then it just really rolled down into the close. And I mean, that was a really bad day for me. By that time, you know, I was out of almost everything. You know, it was a bad day, but that's part of being in these really long lasting uptrends. So, definitely lost money on Tuesday, but I learned a lot because, like what we were talking about, you got the trend line break, and then you recognize that it's wedging up. And I knew, like, I was looking at this, and I just didn't act on it because I figured that the big
Yep.
boys would come back. It's the stupidest thing, what am I? That's just a narrative. But look at then the distribution days piling up. Like, if you read Bill O'Neill's How to Make Money in Stocks, and if you go to the market chapter, he'll basically point this out. You get a low volume rally up. For me, it was just the narrative that everyone was taking the week off. And then you get the distribution days off the top. And so, like, what I'm trying to work on is, avoiding that, and just being more offensive and selling when we're this far in the rally.
Yeah. What I thought was interesting, and I actually discussed this when we were close to the highs that I found interesting. If you can pull up a SPY daily chart real quick, the SPY daily, this is actually a really good study. If you go back to the July top on SPY, we actually had like almost the identical pattern, and I looked at this really closely. Basically, you got the bearish engulfing exactly as we did on the Qs on the daily back in July, and then after that, we had almost an identical inside day the next day as the Qs did in that chart you were just showing, that little inside day. We didn't have quite as many days, but we wedged up on low volume, and then you got the wedge drop to the downside. And it's like it has maybe 2 less candles in that wedging period, but it's like the exact same pattern, like the psychology of how it played out.
Yeah, and like that's why I'm so pissed I missed this last one this week, because this pattern, exactly what you're talking about, is that when you get, like, I like to think about this as like just a just a tough bar, and then when you get this low volume rally up, like, okay, so this green volume the next day wasn't as big as the distribution day, and it also didn't take out the highs. Then you get another low volume, another low volume day that did not take out that high, and then so, like, you're exactly right. Like, here should have been out, whatever, and that's what I need to work on. And the exact same. I'm not going to go into that, but I got millions of examples of these in actual stocks, where you see that play out.
Yeah, I thought that was really interesting. But yeah, you want to get into a couple of those stocks you were talking about, you want to go through from last year?
Yep. Which one do you want me to start with?
That's up to you.
Okay. All
AMD
right.
would be an awesome one.
I'll do AMD because that's the one that we started the year with and really set the tone for me for the year. So it had this big bear market here. I did not catch any of this move, which again proves just be patient, and likely we'll get a setup, but did not catch any of this moves off the bottom. But in here, this is where I started to pay attention to it on the weekly, because I felt like we were setting up this big base, this big weekly base. And when we started to put in this little handle here, demonstrated by that, that's where I was like, okay. Again, this is when the market was starting to bottom, positioning was short, sentiment was horrible. I was pretty dialed into it here, so caught this big move, did great in the spring, and then we corrected for what? I mean, that was pretty brutal. I didn't trade it any of that in there. But when we okay, so let me go back to the weekly. When we then put in this little wedge, whatever you want to call it, it doesn't even matter. Pattern. This caught my eye for sure. And I actually had it back in here. You can see that we had
That's
this
exactly
initial.
where I had it, man. And I
Yeah.
wasn't willing to get back in the next time, and I'm pissed about it.
Yeah. So we had it. I had it in here, and I was pumped about it. And then I made money on it, stopped me out, and was fine with that. But then I was like, okay, let's not lose sight of this thing. And when it started to come in and retest these lows, go back to the daily. When it started to come in and retest these lows, like, I recognize this is what I think of, or what somebody taught me, scum. So you take out this low, right? You take out this low, and then you reclaim it. Look at that power. Like that's important. So knowing where I was at again on the weekly, because we had this massive wedge, bull flag. I mean, a million things you could call it. And knowing that there might be a move, like I was pretty focused on it, and like I had it on this day, and then I think we even had news on this day, and
That
that's
was
where it like
earnings.
really changed character.
Yeah, that was earnings.
Oh, earnings was it? I don't know. Doesn't even matter. But that was that was a great move. Again, it reset right here. Put in so like I mean I'm sure a lot of traders were out of this thing, but it never violated my support. So when it put in this night candle, it's called a bear kicker. So you close the previous dance on the low, and then you just absolutely rip. Like bulls are fully back in control, and that's when I was pretty heavy in this thing. Like basically, I traded this 2 times throughout the year and caught both of the rallies. Um, ANF was another one for me. This one was really interesting because when the market was correcting, it was just this thing was just going up.
That was
So
crazy.
it was pretty crazy, right? Right. So I was actually watching it down here on the weekly because they had a massive earnings report, and I can't remember what they reported, but the sales and the revenue was just insane. And so I remember asking my girlfriend, I was like, "What's the deal with Abercrombie? Like, is Abercrombie back?" And she was like, yeah, like obviously they're back. Everyone has Abercrombie." And then so I had it on my watch list down here, 25s, and I mean, this is one of those stocks where I literally looked at go up every single day, just never got involved. Keep in mind, this is June, and the market corrected from June through September. So while the market was going down, this thing was just absolutely ripping.
Yeah.
Um, and that's when I started to get focused on it when the market was correcting, was right in here. Things were looking really bearish on the index, the bear trap, like we talked about. And then it was right in here I started to get involved when we scummed these lows and then just ripped out. I mean, several different little patterns you can look at right here. So looking at it on the hourly, you hold these lows. Look at that support. Like that's important support to me. You can see the bulls. Just something about you lose that low and then the real money. That's the way I think about it in my head, at least. Real money stepping in here. You retest here, and then it's like, okay, you could set a stop loss here or here, and you don't have much risk at all. And so I mean it just trended really well. It barely ever broke the 5-day moving average. I was able to hold a core position in it. Core position means like, so I'm building a position in here. Like, I was up to like 25% of my equity in Abercrombie. So I was pretty heavy in here. And I was, by the time up here, like I'm selling into strength, happy to sell into strength because I knew earnings report was coming up. And so I had a manageable position and was comfortable holding into earnings because of the cushion that I had. And it was scary at the time. Like if you could have just held through this 15-minute reaction on earnings with understanding that I have cushion and I'm okay with that, it really paid off. We closed the day at highs after the earnings report sell off. And then if you weren't involved in this thing, on earnings day or even the next day or two afterwards. So this is the earnings report high right here. So like look at how many times, okay, we broke out from that. Look at us just refusing to break that. And like look at how tight it gets in here. You got the wedge channel, a little movement, like that's pretty strong support. And so then I added more after earnings in here because it was pretty choppy in here. And I was like, okay, this is a time where I can maybe size it again. And
A quick
then
question, because you just mentioned adding there when it retested that earnings spot. Now, when you're adding to your position like that, how are you trailing your stop? Are you kind of just watching the hourly and just still looking for higher lows and playing off that to kind of trail your stop? Like I'm guessing you
yeah,
don't have like
so
really a hard stop in place, but more just like letting the chart kind of decide for you.
Yeah, exactly. Like higher lows and lower highs. I'm sorry, higher highs and higher lows is like the foundation of everything I'm doing because by definition, higher highs and higher lows it's an uptrend. An uptrend is higher highs and higher lows. So it's very important. So like this would be recognized as like okay base retest support, so then once it starts working like this is a higher low, I would consider that a higher low, and then maybe you can put your stop loss here where it's at cost, so then you have a risk-free trade, because if it breaks here, you're not losing any money. This is a higher low, so and then from there it just hold support, higher highs, higher lows.
God,
um,
that thing is nuts, dude.
Yeah, and I'm actually pretty heavily involved in it again right now. I've had a core position this whole time, but on Tuesday, I think on Monday, it was actually Monday when the market was bleeding. This thing was up 2%, and so I took note of that and I added actually so I could get back to like a position sizing that I was like happy that I would move my portfolio and not a core position. Um, and so, today was a good day in Abercrombie. You just gapped on the open, immediate, demand right here. And this is exactly what I want to see in an hourly chart. We broke through this resistance, and we hit the highs resistance, and there's just, really no reason to panic for me. Even though we, pulled back a little bit, but for me, like I expect this come down, retest here in 91, and then maybe we make another higher high. And then if we retest here, you can put your stop loss maybe to here. Like me, my stop loss is probably around here.
Just keep trailing those higher lows. Nice, man. That's beautiful.
Yeah, I don't know. Coin was another big one. Feel like I'm talking a whole bunch, so just
No, man, this is awesome. It's just incredible to go back and look through these things. With someone that's traded like a large majority of the move. Brock and I were reflecting, on Tuesday and the previous one into the end of the year and the beginning of the year. Just on a lot of these moves, how much of it did we capture? How could we have captured more? Did we overstay our welcome? Did we understay our welcome? Things like this. Especially looking at that AMD, I was pretty honed in on it at that 116, 40, 116.50 spot. And I was really using that like 119 neckline on the hourly double bottom right there that you have. If you'd see like a double bottom on the hourly and the neckline of that is 119 just before that big gap up kicker candle.
yeah,
And something like that, it ended up happening to me more times than I would have wanted in these clear leaders that I got shaken out of something like this when all it did was maybe break that 119 neckline but come into that 116.50 support. And then I found myself on that gap up saying, okay, let me get an hour or couple hourly candles sideways, maybe into the hourly 9 EMA, and I'll, slap the shit out of it again there. And then I'm left, ended up chasing, whatever, 130, 140, instead of grabbing that gap up when people are clearly trapped on those lows.
yeah. This was like a it's tough because this came on news too. I can't even remember what the news was, but like if you were recognizing that in real time, well, shit, I don't think I can pull up a 15-minute candle back there. Yeah, it won't let me go back that far. But like this, I think if I remember correctly, like it came back, like it opened, and I think it came back and it tested like the VWAP. So I'm sorry because I don't have my 5-minute candle up to tell you maybe what I would have done if I wasn't long, but in here I definitely sold into strength, and I only had a core position left in here. But then once we took out this high, like it was up 7% on the day. and I recognized that it was a bull kicker in real time. Once it took out this high, I got back to a full position because I said, screw it. Like, this is the real thing.
No,
You know,
yeah,
I was already
100%,
long a little bit, but I
100%.
was like, no, it's a news changing candle. It's a catalyst. Um, I can't let this thing go on without me, given that it's a leader, given where we're at in the weekly, given what it's doing on the daily.
Similar to like MDB down here around that same time, MongoDB, around 11.6, 11.7. And this was
I'll show
uh,
you losing trade on this one. I got screwed on this one, man.
Oh, we were looking at
I
that
was
there
bullish
too
on
at
this
that
one.
spot.
this, yeah, down where, yeah, at the end of November or beginning of November. You get the, similar thing. In fact, a lot more aggressive of a gap up. I don't even remember I think that was earnings. But I'm sitting here as AMD is doing this, as AMD is gapping up. I'm saying this is that clear trap candle. You call it a kicker candle. Just recognizing that in real time. I just went back and looked at AMD's 5 minute and it gapped up. One of my favorite setups is, combining those daily charts and hourly charts. And I end up really looking for entries on that 5 or 15 minute. And one of my favorite ones is when it gaps up, pulls back to the 5 minute 9 EMA. AMD pulled back into that 5 minute 9 EMA to the penny, held and ran. That was 121 and never looked back on that gap. Manrav had asked. Manrav's phenomenal. He's going through the chat right now, tagging as you're going through and describing some of these moves on the QQQ, and tagging posts that he put on the day 2 days before Christmas about the wedging action. Notes back here at the bottom of October. Same messages about if this spikes up, it's going to be a massive bear trap. One of the questions he asked here was, how long do you hold a position, a certain percentage move? And you've answered this a little bit, a certain percentage move and move on to the next, ride the moving averages and add to it. And then the second part was, how deeply do you look into the can slim criteria, or is it solely the charts?
Yeah.
Yeah.
No, it's a good question. And in terms of the second question, I mean, all of my scanning for the most part, it comes from looking at stocks that are making new highs, 52-week highs or all-time highs. And it also comes on, investors.com, IBD. I go through a bunch of relative strength stocks because that's, right there telling you these stocks are beating the market. But then I run, the traditional can slim screens. Like, it's a huge part of what I'm doing is looking for stocks with 25% earnings growth over quarter, 25% sales growth over quarter. If your watch list is littered with a whole bunch of random stocks that, Target, Walmart, some waste management, company, like, are those really going to be the next leaders? So, like, everything, a lot of my scanning comes from is trying to find what can be the next leader. And a lot of those will come, from sales and earnings growth. So yeah, huge part of what I do. And I'm sorry, I can't remember the first part of the question.
The first part was, essentially, how long you hold a position, certain percentage, move
Yeah.
on to the next.
Yeah, I'm looking at my hourly charts all day long. So if we're making higher highs and higher lows, like, I'm happy to just let this thing trend, and I'm happy that I did in all of November and December with so many of my names, because they definitely outperformed what I thought the market was going to do. So if you're using it, objectively and just strictly trying to trade on price action and not emotions, like, it's very beneficial to do so. So I don't have like a necessary target when I'm entering a stock. Like, I'll literally have, an idea of, okay, where I want it to go. But if you're setting yourself up and saying, I want this thing to hit $500, whatever it might be, like, that's setting an expectation for the stock. And that's going to be, tough for any stock to do what you think it's going to do. So if you're structurally following higher highs and higher lows when your patterns are starting to work, when your trade is starting to work, I would probably get out or at least sell some when you make a lower high and a lower low.
I've noticed on a lot of these winners that you catch, you kind of tend to just trade around a core position on it.
Yeah, I do. Yeah, so I will like coin. I mean, coin. This was awesome. We were extended in here, and I recognized that, and I took some profits in here. After a really big win, and I only had a core position. Go back. I only had a core, so this was like I recognize this is like a little bit of an extension. So only had a core position, started selling in here. But then I recognized like, okay, the daily is still one of the best charts out there. Like if we were to pull up the daily, like I don't have my moving average, my typical moving averages on these FinViz charts because I have them set up for the hourlies. Anyways, this was right into the 9 EMA, and so like this wick was right into it was the first time that the buyers had touched it. And so when I saw this wick off the 9 EMA for the first time, this entire trend since it started from here, like I was like, all right, whoever it is, institutions, traders, big money, they're buying this thing. And then so I got really involved with it back to like a really sizable position in here. I noticed that we held this support. I did not get long here. And then once we came back in here this second time, that's when I added to my core, and that's when this was just really the big part of the move because I had size. Definitely sold some into here, bought back into here because again that was on a 9 EMA. If you look at the daily, it just held it almost perfectly. Maybe it's 5 day moving average, just green line.
No, this since the low back in end of October, this went below the 9 EMA twice, and that marked the low of the day and the opening price. So yeah.
Good call out. Yep. Yeah, I mean, and then look, like again, we're now on to the third run out of an hourly base, and I've just been able to move my my stops. Like if this thing were to roll over here, like I would not want to be long. But this is higher highs, higher lows. We base a little bit for here, and then when I saw like this candle off the open, we gap down. Like that's one of those institutional candles, what I like to call it, whoever the big players are, but like that's big people buying this gap down. Like look how authoritative that is right off support. Retest support, whatever you want to call it. And then definitely I had a core position up in here, and then unfortunately I still had my core position through this day. And because I figured that it would, it was holding the 20 EMA on the daily, and it really hadn't been there in a while. And so I was giving it the benefit of the doubt. And then back here, I actually got back in some today, just trading it. I don't know if it'll be anything, but I'm looking at this thing all day. So got in again today for a trade, but see how it goes. And by the way, guys, I would recommend do not buy this. I got in a pretty good price, and I took home some profits, but I could easily, maybe we'll do something like this and either reject here and then come back down, or we come back down, something like, I mean, a lot of possibilities. Just keep your mind open. Like I could very well see us putting up into here and then coming down. I think for the most part the trade's over. We'll see what happens.
Man, one thing, couple things that I'm gonna take away from this. I've been sending Brocco a few DMs throughout is something I often say, and maybe just a goal would like to implement a little bit better, just incrementally on a day-to-day, week-to-week, and month-to-month basis, is the let's not lose sight of this, right? You mentioned that when you were going through AMD, that might have gone through short periods of chop. But you recognize the bigger picture from the weekly charts of the pattern there, and using the hourly primarily as your positioning signal is maybe when the hourly isn't lined up exactly and appropriately for entry, not losing sight of the bigger picture of what the story is being told on the weekly.
Yeah.
So that was great.
Yeah, I love that he said that, because that's one of the biggest things I've been working on for so long is, even though you see a really, really nice setup, your timing might not always be perfect, right? And that's one thing, I asked Kel about on the workshop when he came on, about, when he was going over some of his winners, his ability to, just get right back at a name if the first entry didn't work, even the next day, right? And I have a lot of trouble with that. And he talked about how one of his best skills is, he has a very short-term memory when it comes to the market, right? He said you have to, right?
You have to. I think, one of the most important parts of this game is knowing which stocks you're looking at here. And so stock selection is very important. Knowing what technically is the strongest, knowing the fundamentals, what's the strongest, and if you get both those aligned, it's a perfect combination. But, you're exactly right where, you might miss that first move and then you'll just get, you'll get frustrated or whatever. But you need to remember that, okay, this is a leader and I really need to focus on it and try to get in it.
Yeah.
Was there any other questions in the chat that I missed? I wasn't really looking at the chat like you were. Was there any more?
I'm going to try to scroll up very quickly. Here's one that Manrev asked as well. I'm just going to read it verbatim. In a downtrend and on a 1 hour chart, what's your position size like? Not dollar amount, more, mentally. What's your position size like if it's to the left side of the V? Do you do progressive exposure on at once, etc.?
So like if we're in a clear downtrend, but I'm trying to get involved in a stock.
Yeah.
Yeah. So I think it's
maybe like Coinbase, maybe like your
trying
Coinbase trade today, like that.
Yeah.
In terms of like positional
something
size.
like that. Like I would say a max starter position would want to be about 15% of your equity, and that might be a little aggressive. But the way that I'm trading is trying to recognize, those weekly patterns within the daily pattern, within the hourly pattern, so that I'm okay with having a little bit more size, because where I'm entering, like if I'm wrong on that, like the loss is going to be so small where it's okay for me to have bigger size.
Yeah,
Does
you're
that
finding
make
very
sense?
good
Like
spots to risk off of.
yeah, I'm everything to try to get into a stock. Like I won't enter a stock if I don't have a clear higher low and a defined level that says I'm wrong. And that's important for me because it gives me the confidence, based on everything we talked about.
Yeah, so in that scenario, 15%, just some brief math, a 2.5% loss on equity on a 15% position of your account comes to a 0.375% loss on your account.
Yeah, right. And so I mean that's awesome, right?
That's 2.5%. That's some decent wiggle room.
Yeah.
For people that might have been shied away from hearing 15%.
But again, I wouldn't. I'm just being honest with you guys. Like I would say, by the book trader, by the book investor, whatever, they would probably say that 15% would be way too much. For a trade, and I understand that.
Good point.
Man, any overall message to a trader on the brink of things connecting and on the brink of firing on all cylinders, but not quite there yet?
Yeah.
Yeah.
For sure. Focus on keeping your losses small. Focus on your losses. Like I talked about, I don't hold losers overnight. It's not worth the risk to me. If I'm wrong on something midday, I'm out of it. So really, it's okay to be wrong, but when you're wrong, you lose small. You don't want to lose big. And when you win, you have the opportunity to win big, and that's the name of the game for me. So just really try to lose small. Um, I wrote a few things down. Have try to. It sounds like all of you guys are in this community that you guys have, which is great. But mentors are huge. To bounce ideas off people. Make sure you have the right mentor. Make sure you have somebody that trusts, that lines up with what you're doing, and has been successful. I got a few books here that just three. I've read a whole bunch more than this, but three that I think everyone should read. Talked about this one earlier. Japanese candlestick charting techniques. Freaking huge book, but like it's got awesome stuff. Like that's a dumpling top. So basically, I mean, I can think of a whole bunch of situations where I've seen that play out recently. One Up on Wall Street by Peter Lynch. I think this does a really good job in terms of maybe understanding the fundamental side more, just understanding more things that maybe you didn't know about, and then obviously the Holy Grail. Outside of books, though, like I just really can't emphasize this enough. Like go to your favorite traders, see exactly how they're doing it, look at the charts that they have, and understand the psychology of what they were thinking about at the time. That's it's cool because if you're following a great trader, you're seeing like all of their advice and all of their suggestions play out in real time, and that's incredible. And then the last thing, I have these all written down, so I'm not a robot. But the last thing, I think it's really important, and maybe a lot of people underestimate this, but try to have a healthy lifestyle. If you want to be serious about the stock market, if you want to be serious about coming to work every day when the stock market opens, you want to be exercising, your mind's right, you're eating healthy, you're organized in life and your small stuff, you're waking up on time, feeling good. Like that's all really important, and maybe I didn't recognize that at first in trading, but just having an overall healthy lifestyle, I think is really important.
Awesome. I remember I first reached out to you via DM and I saw a post about like a Netflix trade you had, and I was in the same trade and I got shook out, and you actually were still in, and you got back to me and wrote like a whole 2 paragraph thing, sending me charts, and we bounced back and forth and followed up on that idea throughout the next few days as it worked, and it was a pretty cool learning experience. But yeah, reaching out to some of your idols on Twitter or whatever, highly recommend. We've been going for an hour and 20 now. Briefly, if you want to just quickly finish it up with just a little, brief outlook of what you're seeing in the market right now and kind of how you're approaching things.
Yeah, I mean, it's really difficult to say right now. Like, I got 4 names. I'm long 4 names right now. Abercrombie and Coin. It's been easy for me to hold these things. Coin, I got a doubler in, so as we probably topped out, I'm a little comfortable still holding that core. Especially with where we're at. But and then Shopify and Kava is the other ones that I have right now. So I'm among 4 names. Shopify and Kava are I definitely had those before we topped. Sold them, but rebought today for day trades and ended up holding them, which is maybe a little risky. But the reason I'm doing that, like if the market can recover a little bit, I already have winning swings in them.
You got some exposure. Yeah.
If the market can recover a little bit, the way that those have held up, I think that they have the potential to be a huge winner. So I'm just trying to maybe think out 1 or 2 days in advance and taking advantage of the fact that I do have that winner. I mean, in terms of what I think the market will do, I have no freaking idea, man. Um, we're in kind of
I
no
love
man's
that.
land.
No idea. I love that.
We're kind of in no man's land to me. I mean, like you got got this move, got this move, got this move. Like, what do we do next? Are we, rolling over to 50? Are we coming in here and retesting 393? I thought today, and I traded this way. I knew that we were going to gap down once I saw the pre-market stuff. I knew that some oscillators were definitely becoming oversold in terms of short-term oscillators. So I thought that we'd get like a bounce off the open, which we did, and I was able to make some cash flow trades, which was nice. But then we rolled over into the close, and so that's kind of demonstrated. You can see we wicked. We tried to reclaim yesterday's lows, failed, and then closed on the lows. So long term, I'm bullish on this market. I don't know when that next big uptrend will be. I mean, we're in an uptrend, sure. I don't know when we'll get a next big sizable run. I mean, could be tomorrow, could be 2 weeks. I'm not sure. I'm just right now, I'm definitely cautious given how some of these software stocks have looked and some of these technology stocks have looked. We have two. So how I'm trading this on the hourly right now, we have two unfilled gaps above. So like I was talking about it in the bullish scenario, you like to stack up these unfilled gaps. Well, this is a bearish unfilled gap. This is a bearish unfilled gap. Didn't even come close to closing it. Didn't even come close to closing this one. Today we gapped down and we did close it. So that's like kind of important to me. It's like, okay, we didn't close these two, but maybe we're making a little progress. Now we could, again, definitely roll over, retest this high right here, 393. Or maybe tomorrow we gap down and then put in a little short-term bottom and then, maybe rally up to what would be the 5-day moving average, as this starts to flatten out. But I'm sorry, I can't give you a good answer of what's going to happen in tomorrow or the next week or so.
Yeah, kind of at a tricky spot in the market to ask you, the outlook question.
Yeah.
I would say long term, like going back to that 2-year cup and handle. I mean, we just came from. We just had 9-week absolutely rip. So when we do this and then correct and then do this, that's very bullish. We're at the highs. So maybe we come back in, retest. Like we got the 10-week moving average coming up here. So we're only like 1% away from that. So that could very well, provide support. So the good thing is you don't have to know exactly what's going to do. Once the price action starts to develop, the patterns will come to you.
Oh, yeah.
I got one last question. You briefly mentioned throughout that you said you took some cash flow trades. To anybody who might not understand, what do you mean when you say you take like some cash flow trades?
Yeah. So like snow, I was watching today. I knew that snow was coming down into this big. I should have this drawn out here. Lazy, but I knew that we were gapping down into this big support line. Like and you'll recognize a lot of my trades come from taking out these lows and reclaiming. So I was watching this thing and here that's when we reclaimed, that's when I started to get long this thing. And then we came up in here and notice how you see this. Let me zoom in a little bit. You see how this wick on the hourly chart was basically the same high of where we rejected yesterday into the gap. Well, that told me that, okay, we had a nice little bullish. The indexes, the Qs were starting to roll over at the time. So this was a cash flow trade where like, all right, cool. Made some money, happy to sell this thing, just to get some cash.
Nice.
Like ideally, I would like to hold this and maybe we can close that gap. But the way that we rejected this gap, I felt like I was being greedy if I tried to hold, and I'm thankful I didn't. Otherwise, I wouldn't have made any money on this.
Yeah. Nice. Well, I think we could finish it up there. I mean, that was about an hour and a half session. That was pretty damn good.
Yeah,
Cool,
this
guys.
was
Thanks. Yeah, thanks a bunch for having me. That was a blast. I hope I helped somebody. Reach out on I got my Twitter DMs open. So if you ever need anything, guys, I'll do my best I can to help.
Awesome, man. Hopefully we can have you on sometime again in the future. And yeah, really appreciate you coming on. I'll put your handle in the chat here, JmoneyStonks, for anyone that wants to go follow him on Twitter and check him out. He's got some really good charts and really, really good insights. Highly recommend you give him a follow if you want to navigate this market properly. But yeah, I guess we'll close it up there.
Did Brocco go robot? We're putting together a fund for Brocco's Wi-Fi if you want to. No.
That's good. Yeah, he probably needs it.
Yeah. Yeah. One day you guys can meet up and go play some puck.
Play some puck. All right, cool, guys. Well, thanks a bunch, man. That was fun.
Absolutely. I'm gonna take the host from him so I can end this recording. Here's the awkward Zoom moment to where we try to shut it down and can't.